All right, so I will go ahead and walk through some housekeeping matters just for everyone to know before we get started. Again, thank you for joining us today. We're sure everyone's extremely busy. We're honored to have Federal Housing Administration Commissioner Brian Montgomery, as well as several members of his senior staff joining us today. And they will be discussing steps HUD and the FHA are taking to assist borrowers, renters, lenders, and property owners during this crisis. So this video will be posted online on our website after it's over. So feel free to share with anyone in your network as you feel fit. Right now, everyone should be in listen-only mode. So if you do have any questions, we will have a Q&A section at the end of the presentation. You can use the question and answer function in GoToWebinar to ask any questions that you have. So there should be a little chat bubble with a question mark in it on the right-hand side of your screen, and that is where you can ask any questions. If you have questions for either specifically Commissioner Montgomery or any members of his staff, you can clarify in your question so that I can direct the questions as appropriate. Please give me an email if you have any other comments or issues. My email is qmulholland@nhc.org. And thank you again to everyone for joining us. With that, I will hand it over to our President and CEO, David Dworkin.
Thank you, Quinn. I appreciate all your work, and I appreciate for Brian and his team for joining us, and all of you for being here. It's a strange time in American history, and there are a lot of implications to this crisis that go far beyond healthcare, although obviously we're all primarily concerned with that. We want to be sure, and all of us are working to ensure that this health crisis and a resulting economic crisis doesn't result in a housing crisis as well. And many of you are working tirelessly to make that happen, so thank you. I'm going to introduce my friend Brian Montgomery, and I'm going to let him introduce his senior leadership team, who he's thoughtfully brought along with him, which is great. We're going to be able to really go into depth on some of your questions. Brian Montgomery is the Assistant Secretary for Housing and Urban Development, and he's the Federal Housing Commissioner for HUD. He's the only person in the history of the position to hold it in 3 administrations, which I believe makes him the Secretary of Been There, Done That. He has also been nominated by President Trump to be the Deputy Secretary of HUD, and he's been delegated, quote, certain duties of the Deputy Secretary, which include managing the day-to-day operations of the agency, advising and assisting the Secretary in leading the department's nearly 8,000 employees. As FHA Commissioner, he's responsible for the management of FHA's $1.3 trillion mortgage insurance portfolio, and that includes single-family, multifamily, and healthcare programs. And as Assistant Secretary for Housing, he also oversees HUD's project-based Section 8 rental assistance housing program, the Office of Housing Counseling, and HUD's manufactured housing program. He has over 30 years of experience in the public and private sector, and he brings to HUD a deep knowledge of a wide range of housing policies, including work reforming the Real Estate Settlement Procedures Act, and developed solutions to assist struggling homeowners during the financial crisis when he was leading FHA in 2008, as well as FHA technology modernization, which is really a critical part of the future of the agency and of the program. In addition to his career at HUD, he also served as Secretary of the Cabinet from 2003 to 2005, which, as many of you know, is really a critical position. He also has served on as a member of the Board of Directors of NeighborWorks America, one of our members. And as Secretary of the Cabinet, he was appointed by the White House as the primary point of contact for the Shuttle Columbia accident investigation in February of 2003. And for that, he was awarded the NASA Exceptional Service Medal Award. So he is also an astronaut. Given enough time, he will also be happy to let you know he's a proud graduate of the University of Texas at Austin. So it's a long resume for an impressive guy, and we're really happy to have him on board. And thank you for being here, Brian.
Well, thank you, David, for the invitation, and also thank you for your leadership. And thank you to everyone on the line who's helping to assist people in need as a result of the coronavirus. We appreciate working with all of you to ensure our most vulnerable populations are receiving the care and attention that they deserve during this extraordinary health and economic emergency. I know we have very broad representation with us here today. As you know, HUD has been working continuously in the past few weeks, trying to ensure that each of you have the tools and resources needed to help others get through this. We've been working with state and local leaders, key HUD partners, including other federal agencies, the White House, and many other stakeholders all over the country to provide immediate relief to people impacted. This includes homeowners, renters, the elderly, and the homeless. We especially want to thank the many people on the call today who are on the front lines of this fight. Many have been working tirelessly day in and day out to ensure people have food, medicine, housing, and other essential household items, particularly for our senior residents and homeless who are at risk. Others are allaying the stress and fears with vital information of those who have lost income and still have hungry mouths to feed. As difficult as this has been, there have been many bright spots in the way that our country has pulled together. So again, thank you. I want to recognize my HUD colleagues who are on the line with us this afternoon. We have John Gibbs, the Acting Assistant Secretary for Community and Planning Development, Hunter Kurtz, the Assistant Secretary for Public and Indian Housing, the Multifamily Programs, and Joe Gormley, the Deputy Assistant Secretary for Single Family Programs. So we hope to make this meeting as informative and as productive as possible. So David and I wanted to include them, which I believe should facilitate a very worthwhile discussion followed by a Q&A. Hunter, who many of you know, and again, who leads PIH, will need to jump off at some point for another call like this, but hopefully it can be part of the initial discussion. I'll also note Secretary Carson is heavily involved as a member of the President's Coronavirus Task Force, and he sends his greetings as well. I can tell you that he and other members of the leadership have been nonstop in their efforts. We're all grateful to be able to spend a few minutes with you, outlining the efforts being undertaken by HUD, alongside many of you as our partners. Let me begin talking a little bit about community planning and development, and then I'll move to a few other areas, including public housing, multifamily, and of course, single family as well. But as I mentioned, the homeless population is one of the most vulnerable groups in the country right now. There are already terrible health risks associated with the homeless population, and unfortunately, COVID-19 brought that into even sharper focus. They're also more likely to have compromised health, which makes this an extremely urgent concern. It is a problem that affects everyone, one that our HUD team deals with every day in communities across America. The CARES Act included an additional $9 billion for CPD. This includes $4 billion in emergency solutions grants, or ESG as it's known, to provide state, local, and tribal governments with both emergency shelter funding as well as homelessness prevention funding for individuals and families who would otherwise become homeless due to coronavirus. It includes $5 billion in CDBG to help community more broadly respond to the crisis, and $65 million in HOPWA funding to benefit low-income persons living with HIV, AIDS, and their families. Well, John Gibbs and his team at CPD have put forth a Herculean effort to allocate and begin awarding the first $3 billion of that that was provided by Congress, all in record time. All these funds are designed to help contain the spread of coronavirus among vulnerable individuals. As we work to get these funds out to communities as quickly as possible, we obviously have received many inquiries. One common question we receive is, can we use funds from a different HUD program for COVID-19 efforts? Well, the CPD office is helping communities respond quickly and providing maximum flexibility in utilizing their CDBG and home funds. So these dollars can be used to assist healthcare and homeless providers of urgently necessary services during this time. Communities that wish to amend their CDBG plans can contact their HUD CPD representative if they need assistance. Another question we've been hearing frequently is, when will the new funds hit our accounts? And when will the next allocation come? The timing of the funds hitting accounts will depend on, of course, on how efficiently states and localities can develop their plans and sign an agreement with HUD. But we believe we could see it happen as soon as the third week of May. a faster turnaround than normal because of the waivers being granted in an expedited process. In accordance with the CARES Act, the next $1 billion of CDBG CV standing for coronavirus, will be allocated to the states and insular areas no later than May the 11th. The remaining $2 billion after that will be allocated on a rolling basis based on unmet needs. Through all this, I would like to add, our CPD disaster recovery team remains laser focused on their critical mission. And well before COVID-19, HUD and Secretary Carson were working to solve the terrible scourge of homelessness that affects many of our major cities, particularly on the West Coast, but also in New York. At the direction of the Secretary, HUD has developed an infectious disease toolkit for continuum of care homeless shelters, CFCs. This document includes specific guidance for preparedness in shelters and encampment settings. HUD has also provided technical assistance on infectious disease preparedness and mitigation to those COCs who have requested it. In CPD's Office of Special Needs Assistance Programs, known as SNAPS, which administers the COC program, is strongly encouraging homeless assistance providers, especially shelter providers, to take measures to prevent and manage its spread, including the coordination of medical care for residents who are ill. For the Office of Public and Indian Housing and our many partners to continue to serve their mission, the CARES Act provided additional and broad waiver authority and flexibilities. And PIH has never had waiver authority like this before, so this is new. Hunter would have to sign over 4,000 waivers for each issue and for each PHA. So what it means is that PHAs have the ability to focus on what is most important, the health and safety of their residents. The Act established a 120-day moratorium on evictions for the public housing and housing choice voucher programs. A PHA or owner cannot issue a notice to vacate or file a legal action to evict with a court order for non-payment of rent or other fee or charges, or they cannot charge fees, penalties, or other charges related to the non-payment of rent. After the 120-day period expires, all notices to vacate must provide the tenant with a 30-day notice. The CARES Act provided PIH with $2.24 billion in supplemental funding, which includes $1.25 billion for tenant-based rental assistance for individuals who lose their jobs as a result of the coronavirus, $850 million for administrative expenses, and $400 million in housing assistance payments, as well as $685 million for the Public Housing Operating Fund, $1 billion for Native American programs to provide flexibility to local tribal governments to respond to conditions on the ground and to meet additional needs. This includes $200 million for Formula Native American Housing Block Grant, I mentioned earlier, and finally $100 million for Indian Community Development Block Grants. The bill establishes a moratorium on foreclosures and foreclosure-related evictions under HUD's Office of Native American Programs, ONAP, Section 184 and Section 184A loan guarantee programs. It provides ONAP program borrowers experiencing a financial hardship caused by the coronavirus the right to request and to receive forbearance. For both Section 8 multifamily contract holders and public housing, HUD is ensuring that all housing assistance payments, operations funding, and other funding streams continue to be obligated throughout this period of uncertainty. All 2020 multifamily project-based rental assistance contracts, Section 202 contracts for the elderly, and Section 811 contracts for low-income persons with disabilities were fully funded before the outbreak. And through the CARES Act, we have received supplemental funding for all three accounts. An additional $1 billion in additional funds for owners and sponsors of properties receiving project-based assistance. This is for reduced payments as a result of coronavirus. An additional $50 million for the Section 202 program, which includes up to $10 million for service coordinators, and an additional $15 million for low-income persons with disabilities through our 811 program. Last but not least, the largest portion of our FHA portfolio by far, of course, is single family. Early on, our single family team implemented a moratorium on foreclosures and evictions immediately after the national emergency was declared. We issued guidance through a mortgagee letter on loss mitigation options to ease the stress on both borrowers and servicers. It begins with forbearance, and it includes help for senior borrowers with FHA-insured reverse mortgages. And it prioritizes the use of the standalone partial claim for FHA-insured loans, which was used extensively following the 2017 hurricanes. The mortgage was current or less than 30 days past due as of March 1st, 2020. The borrower is eligible for the partial claim. And to ensure that this process is smooth for both borrowers and servicers, we are developing a new portal to receive and process the standalone partial claims within our new cloud platform. Yes, that it will be a new cloud platform, which, by the way, we've already named as FHA Catalyst. We expect this functionality to be ready by June, right about the time we should be receiving our first standalone partial claim. Borrowers who do not qualify for the COVID-19 standalone partial claim at the end of their forbearance period must be evaluated for other loss mitigation options. In total, the options allow borrowers facing financial hardship due to COVID-19 to stay in their homes now and to have flexibility to get through this crisis and hopefully to bring their mortgage current in the future. And we are always seeking to balance the need to support our mission, particularly during counter-cyclical times, with a responsibility to the taxpayer by way of the health of our insurance fund. And that said, we are committed to exploring flexibilities if and when they make sense and support market liquidity, and if we fully understand the risk presented. When we are able to ascertain a clear idea of the impact to the fund and the outlook, we might have to consider credit box and/or pricing changes accordingly. But for the time being, there are no planned changes. The risk should be tolerable from a cost and performance perspective. Nevertheless, we will do everything possible to increase access to FHA loans and facilitate transactions, and to help the people who are ready and able to get into their new homes or to refinance. We are accepting electronic submission of documents and utilizing e-closings, electronic notarizations, and even electronic securitizations when and where they are permitted. In a matter of only 9 business days, we retooled our ongoing IT modernization effort to assist lenders who do not have delegated authority to endorse loans. FHA can now accept these lenders' large paper case binder submissions on our new digital platform. As we closed the business yesterday, we received over 12,500 case binders through FHA Catalyst. We've instituted new flexibilities for both forward and HECM appraisal inspections, allowing for exterior or desktop-only inspections for most purchase transactions. We announced the broadest possible accommodations so that those in the process of buying a home or refinancing can continue on their path. For multifamily as well, we continue to support solutions for lenders, appraisers, and other stakeholders who continue to work on new originations virtually so that the market can provide safe, decent, and affordable housing. Our multifamily office is currently working with Ginnie Mae to provide a multifamily component to the pass-through assistance program announced a couple of weeks ago for servicers who are facing a temporary liquidity shortfall related to the coronavirus. Now, Ginnie Mae recently unveiled this liquidity facility to support the forbearance and loss mitigation efforts in single family and to ensure our programs work efficiently for FHA borrowers. It is provided to securities issuers who need help advancing principal and interest payments to investors during this nationwide emergency. It is intended to be a last resort vehicle, but it does underscore Ginnie Mae's unwavering commitment to the timely payment of principal and interest to investors holding our MBS in all market conditions. Well, I want to thank you again, David, and everyone for listening in today. I think we have over 900 people. The goal in the short term here at HUD is to keep people safe, to keep them in their homes, prevent any further dislocation, and ensure those at greater risk of the virus are taken care of. It is also to be a source of continuity and strength so that our country can begin to heal, both in health and in the overall economy. And we appreciate, as always, your input, your insight, and your advice, and the role you play in helping everyone get through this. I look forward to your questions, and thank you again.
Thank you so much, Brian. Quinn's been fielding some questions. He's got a few to start with, and then people can continue to add them to the chat box. Quinn?
Yep. So again, the way to ask questions is to hit that icon on the right side of your screen and type out your question to us. A few to start off with, directed at Assistant Secretary Kurtz. The first question is, can a public housing authority terminate a voucher participant family's assistance if they do not pay their portion of the rent during the eviction moratorium?
We lost you there for a second, but I assume that's for me. Yes, I mean, the public housing authorities cannot evict a tenant for not paying rent during this time. There's a 120-day moratorium. That doesn't mean that the rent is not going to be due later on. We're not canceling the rent that's due. It just is, you can't be evicted during the next 120 days. Also, just real quickly, I want to say thank you to everyone out there working in the affordable housing industry. You know, it is, our work is always incredibly important, but it's never been more important than it is today. Providing someone with a safe and decent place to live is truly truly more important today than ever before. So thank you all, and thank you for having me today.
Absolutely.
Hunter, if I could just follow up on that, is there a risk that they could lose their voucher?
I'm not sure what you mean.
If they don't pay during this period, they can't be
right.
evicted. Could they lose their voucher?
Not during the period, but after the period, they could be evicted and lose their voucher if they don't. But the public housing authority is not going to stop paying the landlord during this 120-day period.
Great. Another question for you, Assistant Secretary Kurtz. Some public housing agencies may struggle to cover operating costs if there are significant drops in rent collections related to income lost by residents. So will HUD help increase operating subsidy to cover this shortfall?
Yeah, we have an additional $680 million of operating subsidy that we will be announcing in the next few days. And that will that's roughly 2 months worth of operating subsidy that we'll be putting out in the street. So this hopefully will help public housing authorities with any issues they may have, gaps, but also additionally they have the ability to use those funding for things like providing health, transportation, and other things for residents, delivering of food and medicine. And then we also have HAP, Housing Assistance Section 8 admin fees that are going out to public housing authorities. And we're continuing to look, we have funds for shortfalls. So we're continuing to look to see if there's public housing authorities that are having shortfall problems. They should contact us and then we can provide them with additional funding. That's important.
Great, thank you. So this is a question, I guess, for the whole group. With 30 million Americans filing for unemployment since the COVID-19 pandemic erupted, what do you anticipate will be the impact on FHA loan performance in the medium and long term? And how do those expectations change should unemployment hit the 40+ million mark that some, including the St. Louis Fed, are predicting?
So I'll go first and then pitch it over to Joe. Well, we certainly want to first and foremost take care of borrowers. We obviously have a responsibility to the taxpayers via the FHA Mutual Mortgage Insurance Fund. And the good news is over the last several years, we've been able to bolster our reserves, both cash reserves of today, which is about $53 billion, and then another $47 billion in projected receipts. So in our annual report to Congress for last fiscal year, it was published in November, we introduced a new metric called claims paying capability, which today was about a little over $109 billion. And we had run some stress tests prior to that with our actuarial contractor using the Great Recession as the benchmark. And we had just about enough in reserves to weather what at that point was obviously a critical and devastating blow to the housing market. So between us, our reserves, which we could deploy later after borrowers come out of forbearance and go into a partial claim, and with what Ginnie Mae has and their reserves, again, as a last resort through their pass-through assistance program, their liquidity vehicle. We feel for now we're well positioned to weather the storm, but like all of us on the call today, it's anyone's guess how long and how wide, how deep, how long this pandemic will last, and which obviously impacts the labor market in a big way, including a lot of hourly workers, a lot of folks working in retail, restaurant, hospitality, manufacturing. Said another way, the heart and soul of our borrower base. So we're keenly aware, our risk team watches these metrics every day. We have daily calls with FHFA. 3 days a week, we add CFPB to that call. And then directors, Craniger, Calabria, and I have a weekly call on Monday. So we're definitely comparing notes and trying to move lockstep in everything that we do. And I can, speaking for all of us, we're keenly aware of the impact on borrowers, on renters, and the homeless. And we're trying to, in other ways, I hate to say cut corners, but we're trying to kind of taper the edges of some of our policies, recognizing some of the, the social distancing constraints and others that we're living through. So, Joe, you want to add anything to that?
Absolutely, Brian. Just a couple of extra other things. After the CARES Act was passed, we were quickly got out our mortgagee letter 2020-06, which implemented the forbearance periods required by the CARES Act, and also promulgated our COVID-19 standalone partial claim. We thought it was important to get that out quickly, so there was some clarity for borrowers and servicers on going forward. But we can continue to iterate on the whole loss mitigation kind of ecosystem at FHA. We're looking at some additional kind of tweaks to how borrowers will be processed, not with the actual forbearance period itself, but just how the whole partial claim works, in hopes that it will be a little less burdensome on servicers and FHA, because we know we're facing an unprecedented number of these on the back end. And then we're continuing to look at our overall loss mitigation waterfall. I think unfortunately, our hope is that when people come out of forbearance, they're going to be able to resume making their prior mortgage payment. And while we do have steps in the loss mitigation waterfall right now, for those folks who are unable to, given that, as I said, the number of people coming out of forbearance is really going to be unprecedented. As Brian said, we're looking at continuing to look at ways to streamline that process, and possibly ways to reduce documentation that's required of the borrower to get into a loan modification.
Great, thank you. So another question for the group. Assuming a peak 20% unemployment rate among homeowners, 80% of Americans will still be working throughout this economic crisis. So then why are there such severe credit overlays, and does this actually worsen the economy by constraining housing activity in sectors that are doing okay?
Well, I'll go first. Anybody else can chime in. I think early on in this crisis, there was a lot of uncertainty. Certainly, there still is uncertainty today. It was unknown what sort of liquidity, what sort of other loss mitigation tools we deployed by us, by FHFA and others. I think is that, well, I'll just say we monitor that every day. We talk to warehouse lenders. So I think a lot of them were reacting to that uncertainty. Make no mistake, some of those overlays would have a really pretty huge impact on our ability to do purchase loans. I mean, our average credit score is 669. So if people have overlays of 680 and 700, you can do the math, see what kind of impact that would be. So part of our job and part of what we do here is talk to the industry, to advocates and others almost daily, to kind of take their pulse as to what they're envisioning. Obviously, these are corporations outside of America. They can make their own decisions, but we'll be hopeful that some of this, and as more tools are deployed, again, we're being mindful of the limitations around interaction, that we take all that into mind. Hopefully we can see some of those go down somewhat. Joe?
Yeah, just real quickly, I think whenever there's a market disruption, financial downturn, it always takes a little while for the market to kind of find equilibrium. So we're looking at those places where there might, where we might be able to provide some clarity, so lenders have the full confidence to lend in the FHA program.
Great. Another question for the group. Is it necessary to increase premiums for FHA borrowers given the strength of the FHA fund? And if so, could that undermine the countercyclical role that FHA plays for its borrowers and for its buyers, and the national economy?
Sure, I'll go first. And it's probably in related to an interview I did last week when I was asked about loans where the borrower is closed and they immediately request forbearance and have not been endorsed, insured, or obviously sold into securities. It was, how do we treat those loans given that goes against our existing policies, and which the GSEs obviously have addressed. So it's in relationship to that, but I think the way it was reported when I was talking about premiums writ large. So I would say, we always reserve the right, given the Credit Reform Act and others, to adjust premiums accordingly. But today there's no serious discussion about increasing FHA premiums. And trust me, if we had to do so, it would be as a last resort. And by the way, I'm required to consider that as part of being on credit reform, to consider any and all tools at my disposal to keep our capital ratio above 2% and to keep our credit subsidy rate below 0. And but make no mistake, as unemployment if it goes up more, if you have more strategic forbearances, we could be facing a lot of claims down the road. We're hopeful that doesn't happen, and luckily we do have a fair amount of reserves to deploy if we need to, and we're fully prepared to do that if we have to. Joe?
Yeah, I think you answered the question very well, Brian. I would just add, our Chief Risk Officer, Keith Becker, isn't on the call today, but Keith and I have been having a lot of conversations about what data, we might be able to make available on forbearance requests, and ultimately those loss mitigation solutions that people go into, just in an effort to be completely transparent. FHA is a government agency, and I think we do owe everybody every effort to be transparent in our thinking and our actions. Obviously, our annual report will be out later this year, but that won't be until November. And we're definitely thinking about how to kind of make data available on a more regular basis, at least when it comes to COVID-19.
Great, thank you. A question on forbearance. How is the FHA addressing eligibility of loans for borrower forbearance before the loan can be insured?
Well, I touched on that briefly earlier, but Joe, your info may be a little more up to date than mine, other than I know we're still looking at the policy and expect to have a decision soon.
Yeah, since we have not made a decision, there's not a whole lot we can say publicly. Obviously, we are aware of the announcement FHFA and the GSEs made last week, and that's something we're continuing to look at. Obviously, their programs operate a bit differently than ours, and they have some different tools at their disposal. We're just trying to be thoughtful in how we approach these loans that do go into forbearance in that time period between closing and endorsement. Ultimately, we think it's going to be a pretty small number of loans that fall into that bucket, but we do understand how that's kind of affecting pipelines, the overall effect that's having on pipelines and some of the participants in the marketplace. So we are, it's priority number one for my office to provide some additional clarity on that point.
Great, thank you. And we're getting several other questions about forbearance. So in the interest of answering as many people's questions as possible, I'll kind of combine a few together and just see if anyone has anything they can add on each individual one. So someone is wondering, whether the FHA will match Fannie or Freddie's policy of charging additional basis points for forbearance. Also, we're hearing that people have heard that they will receive forbearance and don't understand that they have to request it. So is the FHA going to require mortgage servicers to send notice of this right to borrowers? And then someone is wondering how the FHA is going to assist single-family home borrowers impacted by COVID, but who have already reached their partial claim maximum from a previous modification. So if anyone has any insight on either of those three questions.
Yeah, I'll go first, and maybe Lamar could add at the end how the forbearance is working in the multifamily space. That might be of interest as well. So we put, as Joe mentioned earlier, we put out a mortgagee letter really within a matter of days after the CARES Act was signed. The forbearance language in the CARES Act is different from what our normal program is. And so we looked at the language. Obviously, I won't dissect what's in it or what's in the mortgagee letter, but it references that it is up to 6 months, and that it can be another 6 months if requested. Obviously, borrowers are strongly encouraged. They do have to reach out to their servicer. I know early on, the DBA was tracking the data in terms of forbearance requests through their members. They were tracking how long folks were on hold, how long it took to get a call returned or an email returned. And early on, I think they've been doing this probably now for 4 weeks. Those numbers were pretty high. The good news is over the last 2 weeks, they've started to come down. So we've always encouraged them to reach out to their servicers and discuss their options. In terms of what was the other question about the standalone partial claim? You said if someone's already reached
their partial claim maximum with the previous modification.
Joe, do you have any insight on that? I mean, that's probably a fairly small percentage, I would think.
Yeah, I think unfortunately there are some folks out there either because of previous financial difficulties or because more probably they were impacted through a more recent disaster, the 2017 hurricanes being the most prominent, have already exhausted the partial claim. We allow up to 30% of UPB to be rolled into a partial claim. Have either already exhausted that or maybe close to exhausting that. And so that's, we are looking at what types of solutions we could provide those people to hopefully keep them in their homes post COVID-19 forbearance.
Great, thank
you.
you.
Lamar, you want to talk a little bit about the multifamily?
Yeah, thank you, Brian. The forbearance provisions under the CARES Act differ significantly than from the single family side. Multifamily, we can grant up to 90 days of forbearance. I'll remind everyone that the forbearance agreement is between a lender and a borrower, and really we're not involved on the front end of that. We've worked with the MBA to draft a standard forbearance agreement, and if the lender adheres to that without changes, is automatically approved, which is good. There's a 12-month repayment period after the forbearance period ends to repay the lender back. That said, the lender, it's between lender and borrower, and there's a lot of latitude that both can have with that agreement and the terms that they negotiate. At the end of 12 months, if the loan has not been able to be repaid, the borrower can go back, ask for an extension. So there's a lot of flexibility there so far. Just to give you a little bit of color in the market right now, we have not been, as of yet or as of today, have not been notified of any forbearance requests or forbearance agreements being placed in service. April was a very good month from a rent collection standpoint, as you guys probably are aware of. May will be I think the litmus test to really see which way we go here. I have concerns about to the forbearance question, 2 pieces of my servicing portfolio, and that revolves around the market rate side, we've financed or refinanced so many older properties which serve as workforce housing. These people will be subject to losing their jobs. And the other sector of the portfolio that is going to be impacted, I think, greatly will be our LIHTC portfolio. And that's the properties that we're refinancing after the initial 15-year compliance period. And I think those will be the areas that if there are forbearance requests, we'll see those very, very quickly.
Great, thank you. So we have one question for you, Assistant Secretary Kurtz, on PIH. So PIH just put out 2 notices this week on supplemental appropriations from the CARES Act, both public housing operating funds and housing choice voucher administrative fees. So when do you expect the PHAs to receive those funds, and what guidance is HUD giving PHAs regarding continuing to lease units during this time?
So the funding is being announced over the next few days, and it should show up in their accounts in roughly a week. So we, basically immediately. And I'm sorry, the second part of your question was?
And what guidance is HUD giving PHAs regarding continuing to lease units at this time?
They can continue to release units. We have removed the housing quality standard requirement or the inspection requirement for a housing choice voucher property. So it doesn't need to be completed before the inspection. We just ask that we're encouraging them to work with the landlords to come up with a system where they sort of self-certify, and then they'll come back sort of after we go back to normal, to have someone come in and inspect the unit.
Great, thank you.
So we would still encourage people to do that. And unfortunately, I have to drop off now. So thank you all very much for having me.
Thank you for joining us.
Thank you.
So a question on...
I can just follow up.
Oh, yes, sorry, go ahead, David.
I'm sorry. Follow up with Joe on the question of the repeat forbearance. Is that an issue that's regulatory or statutory that you're working through?
It is statutory.
Great. So in terms of planning for additional resources from Congress, we have a question on what HUD's plans are regarding these additional resources, like requesting additional resources for housing choice vouchers or other funds specific to the COVID-19 response.
I don't know, John, well, some of these are probably kind of high level now. We haven't fully baked, but John, I don't know if you want to offer any insight from CPD on that question.
Yes, sir. So we get a lot of requests quite frequently from stakeholders, which we appreciate. We really like to be in touch with folks and see what the needs are out there. And so we are getting requests coming in. We try to take those, prioritize them, and think about what is feasible, what is workable that we could actually get out to our communities that would make a difference. This, of course, is largely contingent upon Congress and what their appetite is for passing something additional. That seems to be in flux a bit. We had thought that the Hill was going to be back in session on Monday, but apparently that is not the case now. So we don't have an exact date to when the lawmakers are going to be back in session. So that's a factor there. So there's communication ongoing between us and the White House and the Hill constantly to see what kind of relief or what kind of additional funding is necessary. We don't really have concrete specifics as of now per se, but we have a lot of proposals we've gotten from people. So we'll be ready to go when the time comes, and we'll be sure to take into account what we're hearing from our stakeholders.
Great, thank you. A question on housing counselors, actually 2 questions. So one, will HUD extend the housing counseling certification requirement past August 1st? And then the other question, which is related but just a little more general, is will any funds and additional resources be available to the housing counseling agencies who offer foreclosure prevention and default counseling? And is there an anticipated increase in demand?
I'll take the second part of that question first. We're not yet sure about additional funding. I've been having been at FHA during the last housing crisis, and having served on the board of NeighborWorks then and even today, certainly know the value of having that network deployed, their ability to reach homeowners. Certainly this go around's a little different than the last one. This crisis isn't based on a weakness in the housing market. And obviously there's been a lot of lessons learned from that and been a lot of safeguards put into place. That said, I personally know firsthand the value of that. So we have had some discussions on that topic as well, perhaps something on the next phase. And secondly, we're still considering what to do on that deadline. I know Dan Barry, who's the acting director of that office right now, has been talking to folks out in the field and to the staff, and I think we'll be coming to a decision soon.
Great, thank you. A couple questions on CDBG funds. Do you know if programs created with CDBG funds from the CARES Act can be used to help families who are undocumented or mixed immigration status? And another question is, when will the CDBG CV funds allocated to entitlement counties and cities be available for drawdown?
John, you want to take those?
Sure. Actually, I'll have my colleague answer the second question there. The first question there, we do follow all existing federal immigration laws. So that's kind of out of our control. So there's an act from 1996 called the Forbearance Act. That is an acronym. And what exactly it stands for escapes me. But I think it's promoting responsibility at work, something or other. So we are required to follow that law because it is on the books. So we do follow all existing laws and regulations relating to immigration status, and that is our stance. We're not policymakers in that area. All we do is follow the existing policies that are in place. So basically, that is what we do in regards to issues of immigration status. And in regards to your second question, I'll pass that to my colleague, Jesse.
Who has to find the unmute button. The question was whether to how fast the money was going to be on grantees' lines of credit next and be available for drawdown. There's two quick points here. One is, as Brian said in his opening remarks, that the grantees need to get their plans together and apply for the funds. Most of them are going to be doing the fastest possible way through, which is an amendment to their 2019 plans. We trained our field offices yesterday on how to process and expedite those. And John has definitely asked us to expedite our reviews, which are basically just for completeness. And then we'll send them a grant agreement. Everybody signs it electronically so it can be done very rapidly. And then the funds get put on the line of credit. But the second point is that the CARES Act provided a self-implementing provision that allows grantees to reimburse their costs for prevention, preparation, and response to the coronavirus, regardless of the date incurred. So if they do have unmet needs or eligible costs for grantees or subrecipients, and they've already paid them or they've incurred a cost and haven't paid yet, when the grant gets there, they'll be able to draw. So we're working on guidance to how to implement that, because that's a great flexibility to have, but it's new to everybody.
Great, thank you. A question on the foreclosure moratorium. So will that moratorium be extended past May 18th?
Well, we're currently looking at that. As you know, we got out pretty quick and pretty early on that announcement. So we'll probably have an announcement next week, what we intend to do. I would say we're leaning toward extending it, as you could imagine, but expect the official announcement probably next week.
Got you. Thank you. Regarding vouchers, someone is asking what HUD is doing to help people who are not housed in public housing or receive public vouchers, as there's a dearth of affordable housing units. And so for the folks who do not receive federal rental assistance, is there anything that HUD and FHA are doing for those folks?
Well, this is a question we've heard from folks on the Hill. certainly it's hard for us as HUD to address, constituency groups that are beyond the reach of what our programs serve. As Lamar knows, and I know most people in this call are aware, a lot of folks that are in tax credit properties that don't have FHA really would fall out of that purview of us. But make no mistake, it's a good part of the population being impacted by what we've seen going on with a lot of the closures and things of that nature. It's impacting a lot of that group, 60% of AMFI. So I know Congress, you've seen some bills coming out of the House and I believe the Senate. But again, it's something out of our purview. We've been very appreciative of the funding we've gone through the CARES Act that helps address our constituencies, but do recognize public policymakers and others do need to weigh in on this critical issue, as we have.
My apologies to interject. This is John Gibbs. I've got to run for a 2 o'clock meeting with our team. Apologies for that. So thank you very much for having me on, and thank you for the work you're doing. Appreciate it.
Thank you, Assistant Secretary Gibbs.
Let me just jump in and ask a question of Brian. We're hearing more and more about lender overlays and FHA loans and about lenders dropping out of the FHA program in terms of not making new loans for the 80-some% of Americans who are employed and are not being laid off. It really has a pretty significant impact on the housing market moving forward, especially those who've been underserved in the past and first-time home buyers. How are you thinking about that, and what steps are available to really address the health of the market moving forward, especially the importance of housing bringing us out of the crisis and into a recovery?
Excellent question, David. It's almost a study in contrast. Ginnie Mae is on a path now to have their largest month ever. They're trending towards $64 billion. Remember, as this pandemic was ramping up, and still today, we're in a refi boom, and I don't see the pedal letting up on that topic. But in terms of the purchase market, as I mentioned before, it's an area we're extremely concerned about, and understand, as I said earlier, with the uncertainty of the market, you can understand why warehouse line providers and even some originators, lenders, and others made the decisions they have to do. And make no mistake, they're also dealing with a lot of the remote work things that we've all been dealing with, although I think we've all kind of gotten our sea legs on that. That's why we continue to have a lot of discussions with them beyond the proper policy, a lot on the operational side, recognizing, where's the weakest link in this chain, so to speak. And for some of it's the ability to record a deed at the county deed recordation office. Many of those remain closed. And so what are some workaround solutions that we can do to address that critical and very necessary part of this whole process? So we have many different work streams dealing with trade groups, stakeholders, consumer groups. Again, for our part, want to make sure we are able to take care of the borrowers, but are very mindful, Joe's team working with our risk team, and certainly with Ginnie Mae as well. How are these overlays going to impact us? And we're going to continue to look at that and have more to say in the days and weeks ahead as this thing continues to play out. Joe, you want to add anything to that?
No, not a whole lot else to add. I just say, if there's been any silver lining to this whole thing, it's allowed us to accelerate, or at least give us a justification for accelerating some of the IT modernization projects that we already had underway. And, Brian mentioned the digital and remote closings, that the industry, I think, and a lot of others have wanted to do that for a long time. And I think, once this is all said and done, a lot of these things, we're going to find just work just fine. And, it's going to be tough, even if we wanted to put that toothpaste back in the tube.
Although I wouldn't expect our appraisal policy to remain what it is now, that with desktop or exterior only appraisals, that one will come down at some point.
Right. Great. A question on the Paycheck Protection Program. Are nonprofit housing organizations eligible for SBA PPP loans?
I don't want to get too far over my skis on.
Well, I could answer that since we've applied for one. So I would say the answer to that is yes. It's a process that's complicated, but has moved reasonably quickly for us. It's had bumps along the way. I think it's really important to work closely with your financial institution to try to move that as quickly as possible. And in our case, we didn't get the loan in the first round, but we were persistent and were able to get approved for the second round. So in the event that you don't get through in the second round, I would not assume that it's over. It may be, but continue to be persistent and try to push yourself to the front of the line for the next round.
Great. Another question on vouchers. Oh, sorry. Was someone going to say something?
But I was just saying that was good to hear, David.
Oh, gotcha. Yes. So it sounds like this person's wondering, currently people on Section 8 can apply for interim recertification if their income drops and they need their rent lowered. People on enhanced vouchers, however, when the properties they live in are sold to new owners, HUD sets the rules that their rents can never go lower than what they were on the day the EV program takes effect. So are there plans to change this policy?
Well, I probably know half the answer to that question, given it's PI8 specific. So I'll would ask that we could follow up after this and we can get you a detailed response.
Absolutely. And then a question on cleaning and sanitary equipment. How are the operating expenses at HUD going to take into account the operating cost for COVID-19 related sanitary cleaning and maintenance costs? And what about all the support services, which may undoubtedly be burdened by health, well-being, case management, senior care, things like that?
Again, I'll defer to the PI8 side of that as a follow-up, but Lamar, do you have anything to offer from your perspective on that?
Not really. I mean, we are allowing our assisted properties to use excess cash flow should they need cleaning supplies, PPE, things like that. So we have some flexibility right now, but I'm not sure I'm fully answering your question, unfortunately.
And we can definitely follow up with people after this is over. So if you feel like you have a question that wasn't answered, definitely feel free to reach out to me at qmulholland@nhc.org, and I'll put that up after this is over. I realize that it's 2 and we want to be respectful of your time. So I just wanted to thank everyone from HUD who was able to join, especially Commissioner Montgomery. We really appreciate you taking the time. David, if you have any closing remarks, I'll hand it over to you.
I just appreciate it. I know how hard y'all have been working, and communication line moving both ways has been really valuable to us. I hope it has been to you as well.
Well, it has been, David. I appreciate y'all's your counsel, your advice, your doggedness on these issues. And again, just want to stress, FHA is open for business. We continue to endorse loans. We continue to make payments in our project-based program, 202-811, PI8, CBD, you name it. So we are open for business and making our way through that, and appreciate the partnership with NHC and others.
Great. Well, thank you again. I'm going to share my screen. So again, if you have any questions that you feel like were not answered, please send me an email. My email is here. We also wanted to make sure everyone knows about our COVID-19 Housing Resource Center. This is what it looks like. So if you go to covid19.nhc.org, you can check out resources for people across the housing industry spectrum. You can sort by location and other things, as well as look at frequently asked questions. Again, I want to thank everyone from HUD for joining. Thank you all on the line who were able to join, and I hope everyone has a great rest of your day.